Hello and welcome to today's fast video, which is called S&P 500 and especially Nasdaq tariff squeeze, because this is about positioning for the announcement of semiconductors tariffs that seek to build US domestic supply capacity. So a lot of names had been powering higher and tech just couldn't be sold during the day. When it comes to US dollar, however, the red moving average failed to stop the descent, and today we are seeing a bit of an undecided situation, which, together with positioning and what I expect to be unfolding following unemployment claims, is painting a certain picture. So, how far are we in this corrective move following the breakout, and would we see truly a higher low being made in the US dollar index? Such is the situation in euro dollar at this 116.40 area, provided only a temporary resistance, and the currency pair surged all the way to 117 almost. And now we are seeing quite a reversal. So would it translate and influence risk-taking appetite in equities as we see more money flows into the States following the semiconductor tariff initiative? Quite lackluster breadth, and the daily up candle masks an important development. So let's look at it as at the hourly, at the 15-minute time frame, where you can see I had been talking about the importance of the price compression between 6,330 on the low end and 6,360 on the upper end. And I did not trust the following, beginning upswing, and we got, sure enough, a retest of the lower border, but since then 6,360 had been overcome to the upside, and prices above that level had been rejected. So that makes for the necessity to evaluate the quick turns based on which way the momentum is shifting. And within the opening 2 hours, it was clear that the sellers would not be winning the day. So, and then came the semiconductors tariff announcement. We all know that not just Apple but several other good tech names had been benefiting. Discretionaries had been catching and, importantly, maintaining their bid throughout the session, and those gains of yesterday's regular session were extended in the pre-market session today. Let's dive into this sector overview, where we can see that this happened practically without financials duly taking part. And while it has a little bit of a defensive bias to it, thanks to Staples grade A, I consider yesterday's perspective as sectoral risk on leaning. So let's see how it goes after non-farm payrolls, which, if you look at the last couple of readings, would you see them steeply rising or not really?